So, hello everyone. I would like to introduce you to Tony Lorenz, Managing Director of the Lorenz Consultancy, which is a commercial property consultancy specialising in coronavirus negotiations between tenants, landlords and bankers. Today we're going to be focusing on the impact of the pandemic on hospitality and retail sectors and what Tony and his team see going forward in this market. Other than those who have been able to soften the blow from the pandemic with using takeaway trade, etc., most will have accrued substantial debt across the board with no income for over a year now. How are these businesses able to safeguard themselves as best as possible to ensure they have a viable business post-lockdown, and what are the main challenges that they will face?
The challenges are absolutely enormous. You've only got to turn on the news to see that immediately after coronavirus, you've got pubs, bars, restaurant operators, and even some of the biggest names saying that they're not going to be able to survive at all. The only way in which survival can happen is if landlords, tenants, and bankers accept that they're in a tripartite relationship to ensure that survival. The government moratorium was brought in just for that, for people to talk and sort out their differences. And since March last year, we've been busily working for restaurants, bars, clubs, casinos, and gyms and the like, talking to landlords about how they can help us. And most landlords, especially in the most recent months, have started to give rent-free periods, and rent deferral and mixes of rent-free periods to ensure that their tenants survive, because the landlord without a tenant may be in a worse position than a landlord who's got a tenant, even on what they call a bad deal. I think a bad deal is better than a no deal.
Okay, so obviously these challenges appear incredibly difficult to overcome, and the moratorium protecting tenants from eviction has to date provided a necessary period for tenants and landlords to try and find solutions. With that in mind, what are your expectations should the moratorium be lifted in April?
Well, firstly, tenants have had no trading last year to speak of. They might have had 2 months on and on-off. And even when they were trading, there was social distancing, there were curfews, etc. So they probably only had 2 months turnover in the last year. If the moratorium comes off, let's say in March, and the government did announce that it was going to be the last extension of the moratorium, but that was announced before the national lockdown. And so they do have an excuse to actually turn around and say, we're going to give another 3 months rent-free for what we've previously done. But there's a cliff edge coming up, whatever happens. That's at any landlords and tenants who haven't agreed their deals during the last year. And a year has been long enough for people to come to the table and accept the consequences of what tenants have faced in trading circumstances. But if the moratorium is lifted in March, or even if it's lifted in June, in March the tenant who hasn't paid rent since March 2020 is going to have to find 1.25 years rent and then trade on a pre-coronavirus rental level. So what will follow inevitably with landlords who are aggressive with their tenants, and they have been aggressive if they haven't helped them during the last year, are going to serve statutory demands and winding up orders, and tenants are going to turn around to the CVA route if they can protect their business and protect their lease. And on a CVA, which is a company voluntary arrangement, they can virtually write their own terms of the lease going forward. But tenants will go crash, bang, wallop all over the market. And I can see that Leicester Square will have 1/3 of its restaurants empty if landlords, tenants and bankers don't come together. So the government have various options available to them. Number one, to extend the moratorium, but that's just extending the death rate of tenants anyway. Number two, to bring in some form of payment arrangement, which tenants can then budget for, saying, firstly, the moratorium has been extended till June if they extend it, but the tenants then got a year to pay the back rent monthly as they go forward. So that's the second option which the government has got, to bring in some sort of payment method, which is absolutely essential in my opinion. And thirdly, they could punish the landlords who haven't given a rent-free period. As an example, if a landlord on one property is given a 6-month rent-free period and then the other landlord's given nothing, maybe there'll be a 25% increase or a 50% increase in the rent-free period, which the landlord has to give the tenant. And the government are trying to avoid national redundancies in the leisure industry, which have already occurred. And the only way they can stop that is to enforce that landlords, whether or not they like it, actually negotiate with their tenants.
So you've already said that you don't think that the government should lift the moratorium, but do you think there are any other legislations or guidelines that the government could enforce to not only protect tenants from collapse, but also safeguard the landlords from the loss of income, which they've been?
Yes, you have to pity landlords. They buy an investment which is, let's say, to keep numbers simple, producing 100,000 a year, right? They used to buy it off a 4% yield, which means that their valuation would be 2.4 million. They'll probably be on a third loan to value ratio, a 2/3 loan to value ratio, which means that the bank on the 2.4 million will have 1.6 million of loan, and they'll have £800,000 worth of equity. Rents are undoubtedly going to go down. You can't trade off pre-coronavirus levels in a post-coronavirus market. And if the rent went down by 30%, which is a prediction, which I think will probably happen, then the 100,000 a year becomes 70,000 a year. If the yield goes up because an investor is going to want a better return on his money because the danger of another coronavirus impacting is a real threat. So if that goes down to up to 5%, then the 70,000 a year is only worth 1.4 million. And then the banker's going to be exposed because he's lent 1.8 million and his eventual capital value is only 1.4 million. The landlord will default and we'll have a banking crash. So the one thing which landlords, and I understand landlords' attitudes, when we went to landlords in March of last year, they said, your client doesn't pay any extra rent when he does well. Don't ask us for help when he does badly. In June, they started offering rent deferment. And from June to September, some of the sensible landlords volunteered rent-free periods, which are absolutely necessary to keep survival. Some agreed that if you pay us half rent this quarter, we'll let you off the other half rent. So there's all sorts of things that can be done, especially re-gearing leases for a tenant. For example, if a tenant has got a break clause in 3 years' time and the landlord doesn't want it, we'll change the lease, and instead of you paying us 100,000 a year, we'll accept 70,000 a year if you take out the break clause. So there's all sorts of things that can be done by people who are willing to recognise that we've all got the problem, willing to talk, willing to negotiate, and willing to settle. And if that doesn't happen, God knows what's going to happen to the leisure industry, because there's no way that landlords are going to be able to get the rent out of people who haven't been collecting it.
How do you see the rental values being affected in the short term, and what are your thoughts on what the road to recovery might look like? There's been lots of talk of turnover-based rents, so do you think that this could be the new norm?
Well, this is working from a crystal ball which has got black paint on it, which is beginning to become a little bit more grey as we see more write-ups and we look what's being done in the United States with regard to their chaos they've got in the same industry, with half of Manhattan in trouble. The answer is that, number one, you asked me how I see rents going down. Because of 3/5 of the people coming into central London, and because of social distancing, and because of the fact that people are going to take a long time to feel comfortable to go into crowded places, rents will inevitably have to go down. And I do believe that the rental drop in the leisure industry could be as much as 30 to 50%. Rents, as we've seen from the pandemic, the standard rental basis doesn't survive pandemics, because, if you're closed, you still have to pay your rent. And the one thing which does cover that is turnover rents. And I have no doubt that landlords should be looking at their portfolio, especially on leisure investments, to be investors in their tenants' business. On a rental basis, they're investing in their survival. But if they don't give them the chance of survival, then it's crash bang wallop for the landlord, where he's got to find a new operator, who he's got to give a massive rent-free period for a new fit out and a new venture on it. And the answer is the landlord loses. So sensible landlords will be working with their tenants to take a chunk of their business. There might be equity that they will take a part of the business. There might be turnover rents. There might be extending leases where landlords want longer term security of income, but at a lesser rent, which still gives the same investment value at the end of the day. There are all sorts of ways in which landlords can work with their tenants to ensure that the tripartite relationship is maintained. I am a believer. I'm not necessarily a believer in some sectors of the turnover rental market. Retail is much more difficult, especially where you have your local sweet shop or whatever. But for the major bars, clubs, restaurants, casinos, gyms, etc., it's very easy to monitor turnover, and sensible landlords will put their tenants on turnover rents or even a mix of a base rent. So if, for example, the market rental value post-coronavirus or even pre is 100,000 a year, and it's gone down to 70,000 a year, maybe there could be a base rent of 35,000 a year, with the remainder being made up with as a percentage of the tenant's turnover, which on an average basis over the next 5 years will produce the other 35,000 a year.
So going forward, how do you think that this will impact property investment values?
Property investment values, there is a massive amount of money which wants to come into the property market. It was massively undersupplied in investment, and that undersupply will take a long time to eat up in any case. But there are sectors which are much more heavily impacted by the virus. The office tenant is not quite as impacted, even though he hasn't used his office because he can work from home. So the leisure industry is probably the most impacted. And it would be a brave man to turn around and say, well, pre the virus, this building was worth a 4% yield, and I'm prepared to pay 4% going forwards, when it could be hit by a third, fourth, or fifth virus. We never imagined, right, prior to December 2019, that the property market could be hit by a tsunami, and it has been hit by a tsunami. And in the same way as people who have a house in a flood risk area, which has suddenly been flooded, have higher insurance premiums placed on their houses if they can get insured at all, the investor is going to want a higher return to cover himself, maybe for an extra 20% over the next 5 or 10 years, based on another virus hitting us. So I do think that the yield which a landlord wants, where they were prepared to buy properties off 4% because they get 0% in the bank, will go up, right? And they will be looking for a yield of 5.5%, which means that the rental value on a 4% yield was 25 times the rent, and and that's in round terms because you've got to take off costs, right? And then actually they will be buying properties for 20 times the rent, and there will be a lot of distressed landlords who will be selling buildings where they can't pay their bankers. So I think a lot of property will come on the market. A lot of properties will change hands. There is an abundance of money that wants to get into 4% and 5% investments, especially with the bank rate for the next 5 years looking like it's going to be dotting around zero. The best that the property industry should do is use of the word empathy. Mm-hmm. And that if a tenant is suffering, go and help him. You go and help your next door neighbour. Okay, it's money, but if you don't help your tenant, you may not have one. Right? They are in critical care, and in the same way as the National Health Service are doing their job, right? Landlords, bankers, tenants should all work together to see that the tenant who is in intensive care comes out alive. There might be a long road to recovery, but survival is first.
Okay, all right. Well, thank you very much, Tony Lorenz.
Well, I'm sorry it's so gloomy. I'm normally a happy person, but you can't actually, be very happy. And when you go and visit somebody who's in intensive care, worse still, going to visit them at a funeral. And these are those dark times at the moment, unfortunately.
Yes. All right. Well,
Okay, so have a lovely weekend.
You
Right,
too.
and thanks
Thank
for
you
the
very much
interview.
for your time and sharing your insight.
Thank you very much.
Thanks.
Bye-bye.